What's good, everyone? Welcome back to my weekly trading reflection video, week 21. And as usual, I'll go over my trades of the week, and then at the end I'll share the gems and some lessons I've learned. So without further ado, let's get right into my trade recaps. So starting off the week on Monday, I had this really nice trade taken at the end of New York session. Basically, whole New York session was kind of ass. We didn't really do anything, but then I saw a nice opportunity because we were just bullish on the higher time frame, right? No need to short this price action if we haven't broken a low or haven't shown any bearish signs. So going into New York session near the end, we have built up some nice confluences. First of all, we have an SMT right here with ES. Where ES tapped below the true session open, but NQ didn't. So this can give us a hint. Okay, price, we can be looking for longs below the true session open because ES went below it and we are bullish, right? But it also is double confirmed by another SMT, and it's sequential SMT. If you guys watched my previous videos, this is what I learned from Dave's Concepts. I'm in his mentorship, and it's basically an SMT between two quarters. So we have this first, the third quarter of New York session, and this is the fourth quarter. So we have SMT right here, sequential SMT. But then also within the last 90 minutes of New York session, so between 10:30 and 12, we also have sequential SMT right here between the Q2 and Q3 right here. You see, so that's double SMT, and this happens, this manipulation happens at an area where I expect it to happen because it's at equilibrium at the OTE of this range, and we have built up a lot of buy side liquidity on the way down, which is nice for us to target as draw on liquidity. So after I've seen this, yeah, I just market enter after I see this SMT getting formed. I don't like trading based off of market structure shift. Whenever there's an SMT, I don't really think you need a market structure shift, because if the analysis is good and you know what price is going to do, also based off of quarterly theory, you can see that, oh, this is beautiful microcycle, because we have first an accumulation, then the manipulation, then the distribution, and then the continuation. A really nice trade. I market enter once I'm confident, and yeah, really nice one. Then on Tuesday, I had a small loss. Let me take a look. This was Tuesday. So this was a day where I've taken a lot of trades, but this was actually looking clean on Tuesday, because basically what did we do on market open, right? This is market open, market dumped us, swept this low, but what do we see here is while sweeping the sell side, we swept this sell side, this external low on Dow. And this all happened below the true day open, and NQ tapped this hour one fair value gap. So this can indicate, okay, if we want to look for longs, it's now, right? Because we are below the true day open, we have swept liquidity, so we can expect buy side to get taken out next. And so if you take a look at the microcycles and the 90-minute cycles, we can see that this, in my opinion, is a clear AMD. And the reason why distribution actually is kind of the manipulation is because we zoom into the distribution quarter and we look at the microcycles within it. So this is the distribution quarter, and we sweep the low within the manipulation of the distribution quarter, within these boundaries, right? This is an AMDX. So that's actually why I believe, and I've built conviction with this, that this is the distribution and this is just the manipulation within the distribution. So that's why we can have some moves like this, right? So after I saw these confluences, I wanted to take a long, targeting the highs, because we had a lot of nice highs to get targeted, and we disrespected all these fair value gaps. So I thought this is going to be next. So what I did is I market enter after I saw this range, so from this high to this low, getting respected at equilibrium. Then I see, okay, we grind up. I enter right here because we disrespected this small 1 minute fair value gap. And then I market enter with the TP at the highs. But what happened is I got stopped out at break even. I mean, in a small loss, because I don't know why, but I moved my stop right here once we had this big bullish candle, without actually any reason. So I got stopped out right there in a small loss because I was a little bit too fearful that this was not going to be a good trade. So that's also the reason why I actually shouldn't have taken this trade. But after seeing this SMT, which I didn't see at the time, this would have been a sign to take profits, right? It's not a great RR, it's 1.39, but take profits when SMT is present, right? That's in my plan, that's what I should do. So not really a good trade in terms of trade management. It was a good trade in my opinion, but I should have taken out everything right here, and I should not have put my stop like really close once I saw this displacement. It doesn't make sense. We can still come back and then continue to take profit, but it was just choppy price action. Not really good trade management. So after this small loss on Tuesday, I had another small loss. I think a break-even trade. Let me see what happened. So basically here, what we do here is I still have a bullish bias because I still think these highs were going to get taken out. And we again retrace back to OTE of this range. We have a lot of highs, a lot of nice low resistance liquidity to target. And basically this is high impact news. So I can use this as like a true open. Whenever you're long biased, you can look for trades below the high impact news, vice versa if you're short. That's something I realized, and what they also confirmed. So if you look at the microcycles, I actually should not have taken this trade because we are inside a Q4, and Q4 is not really tradable. I should only focus on trading Q2 and Q3. So that's my bad. I completely neglected the quarterly theory, and let me take a look. This looked good in the beginning, but after I see this, so after I see hesitation to go higher, and I see a 1 minute candle displacing lower, this should have been my sign that this is not gonna work out, and I should close this trade because we are entering into new Q1, so I should not trade a Q1, only trade Q2 and Q3, and this can just be like a generation of another form of buy side liquidity because we retrace back to OTE, and this is not looking good, right? I don't want to trade in Q1. I should take profits here, and that's when I got stopped out at break even, I think. And then at this moment, I thought, okay, the draw is definitely going to be lower, right? So that's when I decided to take this short. After I saw this SMT right here, inside of this fair value gap, we disrespected this fair value gap. So I obviously think this is going to be the next draw, right? We trade from liquidity to liquidity. We fill fair value gaps. We retrace back to equilibrium of this range. I know, okay, the draw is most likely going to be lower, and especially because we have this low and this low, relative equal lows, not really, but nice lows to target, right? And we have, in hindsight, I saw that this was actually a beautiful market maker sell model on Tuesday. That's why I took this trade. So I just constantly react on what the market is telling me, right? It's telling me it doesn't want to go higher. It wants to generate another form of buy side liquidity together with all these highs. I see this 1 minute is getting disrespected. I change my bias, right? And I think this is going to be the next, target. So according to quarterly theory, again, this is an A, this is the M, we have the SMT here. And then, yeah, we can target lower, which is eventually was a good trade because it hit my TP, I believe. And yeah, we took out this low. So after this, I should have immediately been long biased, right? Because we've completed this whole sell model. And I don't know what I did afterwards, but I'm glad I took profits right here for a nice 2.98 R. And then afterwards in the PM session, now my bias is bullish, right? We swept liquidity, we swept sell side, we completed this entire sell model. So now I should have been bullish bias. So let me take a look what happened there. okay, we have all these highs, right? We build up in New York session. We completed the sell model, so now these can be targeted, right? Markets move from liquidity to liquidity. This is nice low resistance liquidity, and basically this was the worst day in the PM session because I just knew this was going to be the draw, but I just took trades a little bit too forced, right? So what I did is I just saw an SMT and I saw order book getting respected. I just market enter right there. Really bad trade. Another one, I see another SMT inside of this minute 15 fair value gap. I again market enter, didn't close any profits at the next swing high. Again, my bad trade management. Another SMT, and then I saw that this fair value gap is getting respected, and I kind of wanted price to retrace back to equilibrium before going to the highs again. So that's why I took a short right here. And then again, I got stopped out. No really displacement. I'm really trading in a choppy price action environment. These trades were too forced. I had already a win on the day and I just wanted more and more and more because I was so confident that this draw is going to be taken out. This was in the power hour, the last 1 hour of the market before it closed. And I expected, okay, the power hour is going to bring volatility in, right? It's going to push price to new all-time highs. But that's also a big lesson I learned this week, that the power hour, so 3 to 4 p.m. EST, is not always going to make big moves, right? You should also expect that, you should always expect that price is not going to do anything. And you should always expect to lose. So that's why I didn't understand here. I just forced trades without any actual clean structure. This is nothing. This is just an SMT inside a minute 15 fair value gap, a little displacement. That's not really a good trade, right? And according to quarterly theory, nothing was clean too, right? So I mean, every quarter is literally just consolidating. So that's why this was a bad trade. Not clean structure. It is not dumb clear what we want to do. What would have been dumb clear is if we have done something like this during this power hour. We retrace back to a fair value gap in discount. Then we have a nice little SMT, a really nice stop rate. Then we have a displacement. Then we have something like this, another stop rate. And then I can enter somewhere right here. This is clean structure, right? This is not clean structure. I'm in premium. And I shouldn't long in premium, and I should wait for something that's dumb clear, right? So yeah, that's that. I should not always expect my intuition. I should only trade what I see, and I should only trade clear structure setups, right? Now we go into Wednesday, which was a day I didn't trade AM because my mom, it was my mom's birthday. So I only traded the PM, the power hour again. And it was a really clean trade actually. So let me just stop the replay and take a look. Let me firstly delete all of these callouts because I'm going to explain you them manually. So what happens here is we are bearish. We are respecting hourly fair value gaps. According to the quarterly theory, everything just looked like we are going to go lower because we have an accumulation right here, right? Remember, we don't use the first third of the first quarter. So we have a clear accumulation here. We just stack up orders. And then we have a manipulation here. Then we should distribute lower. So that was my bias. But going into the lower time frames, let's take a look. This was the power hour. Really clean setup because why? We retraced back to OTE of this range. We tapped this minute 15 fair value gap. We had an SMT with ES, and ES also tapped above the true session open. So I attached this to a market maker sell model. We have a nice internal model, right? Because we retrace back to a key level. And then we, on the way up, we stack up lows, right? A low. This can be targeted because this is also a nice sell side liquidity level for a draw on liquidity. And so after I saw this SMT, so this is manipulation, right? SMT is manipulation between two micro quarters. If you take a look at the replay, you can take a look and see that the micro cycles was really clean, right? This was where I traded. We have a clear accumulation, then we have the manipulation forming the SMT, then now the distribution and the continuation or reversal should form, right? And that's what we had right here. I expected this to be the sell side of the curve because we tapped this minute 15 fair value gap in OTE. ES stepped above the true session open. We are still above the true micro session open. So I took a long ride here after I saw, okay, we were ready to go. We broke this low, just market enter, put my TP here. And then I didn't saw this SMT and I already put my stop loss to break even. So I got stopped out right there. But I still recognized the model. I still thought this was clean. This was just an internal sweep. And then I just re-entered again. Once I saw, okay, this really wants to go lower. And then I put full take profits once we took out this low. And yeah, a beautiful market maker sell model trade. Because we have an SMT, we align the quarterly theory. We are above the true session open inside of an area inside the minute 15 fair value gap where we expect something to happen. So a really nice trade on Wednesday. And this was also like a day where I literally just watched the markets for like 50 minutes and took a trade. That feeling is just amazing. And normally I would just trade every day for 8 hours and then take some losses. But this is like what trading is about, right? You look at the markets, you see opportunity, you put risk on the table and you execute. So that was Wednesday, a really nice trade. Let's take a look at Thursday. I'll need to check on the micro chart for these because I think I have them right here. Yeah, these were Thursday setups. So let's take a look. I have traded a lot on Thursday. And basically this is a really nice setup I took right here. Because what happens here? We are pumping from, I think this was unemployment claims or something, a major impact news. I can check right here. It was core PCA price index and unemployment rate. Yeah, so really nice impact news and we pushed price higher. So that can be a sign of, okay, we really want to go higher because news usually pushes us to the draw. But then of course we don't want a long right here at the top. We want to wait for a retracement inside some kind of fair value gap before then anticipating in another long setup, right? And so this was my bias. I thought we were gonna dip way lower before we're actually gonna start and go higher in the PM session. And so after I saw that there was an SMT right here, let me take a look. There was let me just first delete these multiple setups. Yeah, so after I see this colliding sequential SMT, this is something new. This is so much sauce, and this is basically how it works. We have the minute 15 fair value gap. We have formed sequential SMT, which is colliding sequential SMT, because take a look at, if we put on replay and go back here, you can see that this SMT forms between two colliding quarters, between the Q3 and Q4 of New York session and between Q4 and Q1 of the microcycles within the New York session, right? So this can indicate that this is a high probability sequential SMT because it's colliding with two different cycles. And basically what they also taught me is you can then take a swing low to a swing high, and you can see, okay, whenever you see ES not even close taking out this high, you can anticipate this SMT, and once NQ closed here, took out this high, and NQ was not even close, you can market enter and put your stop at one standard deviation of the swing low to the swing high. So that's what should have been the trade, but I haven't seen this a lot, so you want to see it over and over again before you actually gonna put risk on the table. So this was a forward test trade, but I took it after I had more confidence. After I saw this 1 minute getting disrespected, this is when I had more confidence. So I entered then right there, and then I put my stop to break even here. I saw that this was just still a valid trade, and then I re-entered again. So I took this win just based off of, we tap in a fair value gap, we have SMT right here, the draw is still lower, we have colliding sequential SMT in the 90 minutes and the micro right around the 10:30 reversal, right? So if you take a look at the 5-minute chart, let me just delete this, then you can see that the 90-minute cycles also aligns with this, right? We have a clear start of New York session with an accumulation. Then we have the manipulation that swept the lows and then pushed us higher. Then the distribution, went higher, but because the manipulation already was a big move, this was not really nice price action. But then the Q4 starts, and Q4 is usually reversal, which was my bias and which is exactly what happened. We dip below, tap this fair value gap, and now we can look for longs. Why? Because now we are in in discount of the range. We are bullish. We have all of these highs that's been building up the whole entire week. So then we can target the all-time highs. And this was when a beautiful structure began to form on Wednesday, which was the best structure day in my opinion, because this is just a beautiful, beautiful buy model on NQ. And so after I saw this fair value gap getting respected, then a really strong move up again, disrespecting all these PD arrays. We know, okay, this is going to be the buy model. And these highs are going to be targeted next. So taking that bias with me on Wednesday, I traded in the on Thursday. Oh, sorry, this was all on Thursday. I took a long. Oh yeah, I took a long first before all this happened right here. Why was this not good? There was an SMT here with ES. And I saw this 1 minute getting disrespected. So I thought, okay, this is going to be a nice trade because the bias is good, right? But I was just too early. And whenever price is not ready, whenever we don't have enough structure, we are not in discount, nothing really looks clean, then these SMTs, they will fail, right? Because SMTs only work when the narrative and the context is there, when it aligns with everything, right? And so this was not a bad trade at all. But it was not at the right time. Should have waited for more structure, price dipping inside here. This makes everything higher probability. And so we push up, we complete the buy side of the curve. I was so excited here because I knew this was going to be the draw. And so I waited. I was really patient. And then I took this long. Oh no, sorry, I first took this short because I knew price was going to this level because it was aligning with the quarterly theory as well. We have a clear AMDX. I was hoping for price to, go to this level at least. That's where I took full profits. After I saw this fair value gap getting disrespected, displacement, I just enter right there because we also retrace back to equilibrium of this range, OTE. And that's where I just adapt my bias, right? Because I took this loss first, but I knew then afterwards, okay, we really want to go lower first, and then we can go higher. So this was a counter trend trade, but it seemed obvious for me. This is not an A+ setup, but for me, it was obvious that after we retrace back to OTE, we have disrespected this fair value gap. This is going to be the next trial because we go from inefficiency to liquidity to equilibrium. This is how the market moves, right? And so that was my bias for that. It was aligning with the quarterly theory as well. If we take a look, yeah, this was still in Q4 reversal. So this was why my bias is also still bearish. But then after the Q4 reversal ends and we open the New York PM session at 12 a.m. EST, then my bias was bullish, right? After I saw that we tap here, we displace back up, we start this sell model, right? And so then I took this long. Let me just delete this. I took this long after I saw price dipping back inside of the OTE or 0.5 of this range. So you see right here, we tap again in this minute 15 fair value gap that was forming. And then we have price sweeping the low again inside the equilibrium of this range. So after I saw that we were still below the true session open, we were still below the true micro session open, we tap inside this minute 15 fair value gap, we sweep the low, tap the OTE of this range, then we go up, we have a nice displacement candle, we go down again, we respect this small range's OTE, then we have a displacement candle as well, then I know, okay, this is going to be the next target at least, and we're going to complete this buy model, right? Quarterly theory was not really aligning with this, but because it was just so clear price-wise, I kind of neglected the quarterly theory because everything just looked so damn clean, and that's when I took this trade, but I put my stop loss again too quickly at break even once I saw this displacement candle, and so that stopped me out at break even, and then we tapped this fair value gap, and then everything looked so beautiful because we reacted from this fair value gap, and now I took the re-entry because everything still looked clean right here after we displaced again, and then I just know I market enter, we're going for the highs, right? And this was a beautiful trade. Because everything just looks clean. We sweep the low inside of fair value gap. We know if we sweep sell side, buy side is going to get targeted next, but we sweep the sell side inside of an area where we expect manipulation. We have this high time frame narrative, which is bullish. And so, yeah, also this was also a clean smart money reversal because look at where we tapped here. This is crazy. This is literally the minute 15 BPR. There was like a small, if we take a look at the minute 15 chart, look at this. This was a small minute 15 BPR. And this is exactly where we end up tapping. So this is just beautiful price action. With this move lower, we also had sequential SMT with the Dow, I think, or with ES. It doesn't really matter, but we have all these SMTs right here. And okay, NQ may not have tapped below the true open because the New York open was right here. You see here, this gray line. But on the Dow or on ES, we did it because we have SMT right here. So that's why, okay, we can look for longs. At least if one of the pairs like YM, ES, or NQ tap below the true session open, right? So that's why this smart money reversal was confirmed and why I thought this was just a beautiful long to complete this buy model. And yeah, as long as we are below true opens, it's nice for longs. And yeah, everything just looked really good here. So that was Thursday. A lot of lessons, a lot of good trades, but this was just, I mean, if you look at this, just I hope you see that this is just super clean price action, right? This is just, I just traded the re-accumulation of the buy model, which is usually a manipulation inside of equilibrium, which is what happened, and then we have some kind of displacement, and then we go up, right? So beautiful trade on Thursday, and yeah, then we had on Friday. I didn't take anything on Friday because I started trading around the New York Open, but there was one nice pre-market trade. So around 8:30 a.m. EST, we had still this nice Friday pre-market, which I didn't see because I started trading right here. But Friday was just all the way up. There was not really an entry. So it was a good decision for me to not force any trades and just, have a note trade day, because trading is also about not trading, right? So this was the only trade I could have taken on Friday on the pre-market. Let me explain a bit. According to my system, what we did is we retraced back to equilibrium of this entire range, right? With this wick tap, 0.5. Nice. Draw is still bullish because, I mean, you don't want to short any of this price action. We're just really slowly going to go lower on the week. And then on Thursday, we have this big expansion up. So this is most likely going to be the low of the week. Where news was, and then we just can continue right higher, right? I should stay with the bullish bias, so that's what I did, but I missed the setup. Basically what we see here is we have SMT with the Dow. If you look at the 90-minute cycles, you can see that this is just beautiful AMDX, right? So we have an A, really not something nice here. Then we have the manipulation. Why? Because we sweep the low and we have SMT with the YM and ES. We tap this minute 15 order block right here. We are below the true micro session open right here, and below the true session open we had this SMT. Then we have a displacement, disrespecting yeah, I mean, just a market structure shift basically. And then we end up respecting the small range inside of OTE. And then, yeah, this can be a nice long, right? So, yeah, this was clean price action. Just looking at the 90-minute cycles, AMDX. And on the microcycles as well, we align microcycles with 90-minute cycles. And that's when we get really, really clean setups, because if you take a look, let me just take a look. I think this was also clean on the microcycles. Yeah, so this was a X, A, M, because we put low here, and then the D. And then we start a new microcycle. We have an A, M, a really small M, because we open right here. We go up, then we have one last sweep here, a little tiny sweep on the 1 minute below true micro session open. And yeah, this can be seen as like the manipulation, and then we just go up again in the distribution, right? So yeah, really clean price action this week. I am up on the week. I was down 1K on my Topstep funded account last week, but I managed to recover it. As you can see right here, I'm up 670 on the 50K account, so about 1/5 into passing it. So I'm just focused on really small size. I only trade like micros because I don't like to trade big size, because then my emotions get involved, and it's just for me better to have a slow and steady process instead of rushing everything. But yeah, this was my week. I think, yeah, I had one losing day on Tuesday where I took these 4 setups, but then on Monday, yeah, and on Wednesday, on Thursday, really, really nice days, right? Because I didn't revenge trade. Literally, revenge trading and over trading is the only thing that's stopping me from becoming profitable. So really nice day. And yeah, right now we're going towards the lessons I've learned, towards the gems. So for whoever's still watching, there's some nice things I'm going to discuss I learned this week. So let's go over them right now. So trading lessons from February 26th to March 1st. First of all, I need to remember myself that I should always, can I do this? Yeah, so you guys can follow. I should remember to always accept the risk, because if I don't accept the risk, I'm emotional if my trade goes in drawdown. And so I over risk a little bit on Monday because I wanted to make back the losses from last Friday. And it was a good trade. I ended up making 1K, but I know that if that trade was a loss, it was a big loss, and I didn't accept the risk. And you should always accept the risk. Trade with the risk that you're willing to lose, which is, again, elementary stuff, right? But we need to keep remembering ourselves that. Then I need to remember also that my stop is my invalidation always. This week I was just so much times putting my stop to break even for no reason. And I can put my stop to break even if it's an invalidation, if I shouldn't expect price to go there. So to make it clear to you guys, this is what I mean. So let's say we have an SMT right here at the lows. Then I have an entry right here. So I enter right here, take profit here, stop loss at the manipulation low, at the SMT low, right? But then we go higher, then this retrace back to equilibrium, filling this fair value gap. Let's say this is a fair value gap. Then I can expect, okay, I can put my stop right here, right? Because, okay, we filled this fair value gap. Okay, this is a nice new stop loss, right? At break even. And I think this is good. It's better to do this, but this is better to avoid losses, Because let's say price stop you at a break even, right? Because it can still do that and then go up. But then just re-enter, right? Which I did this week. If I see that this is just a sweep and we displays immediately higher, then I can just re-enter with the same risk. So this is what I'm planning on doing with moving my stop loss to break even. I can put it at internal lows and highs, but I can re-enter, of course, if that happens. Price shouldn't come back here, but it can. So that's why it's better to put off some risk after we displace here, respect this fair value gap, and after it actually did sweep, then I can just re-enter, right? So remember, stop is an invalidation, but I should also, just avoid too many risk and put my stop at new lows and highs that are respecting fair value gaps or PDRAs, right? Now, don't expect the power hour to deliver to the draw. It can also just stagnate, going to the market expecting nothing to happen and expecting to lose, right? So again, I think it was one day of the week where I just hoped for the buy model to get completed instead of the power hour. But I should remember that like this is not always going to happen, right? I think I just saw so many examples where the power hour, so 3 to 4 p.m., that it just really had big moves. And yeah, I basically built in false conviction for myself, because then I thought, okay, this is just going to happen every day, right? Right before they close, it's just going to pump or dump. But that's not what happened. So that's why I took some bad setups, right? I should always expect to lose. And I should always expect nothing to happen. It should be dumb clear what the setup is. Only A+ setups. I can only trade A+ setups, right? Now, engineer liquidity is a big reason why the markets move. This is what I realized. I have a lot of trade IDs and setups based off of this principle, where I basically look at the market and see, okay, this can be a potential sell side target for a later on sell model, right? So let's say I see that we are building up a lot of liquidity right here, and I know that this is going to be a future buy model. Then here is where I expect this buy model to happen inside of a high time frame PDRA, where we have SMT here. When price is at premium right here, if you're long biased, right, then I can take this bias with me that we are most likely just going to respect the OTE, and then I can take a little trade right here, which is not in favor of the bias of the day, but it can offer some nice trade, right? So that's what I mean with engineer liquidity, because what we do here, we just engineer liquidity, right, for later on to get taken out. So it's a nice way to look at the markets, in my opinion. It makes so much sense. So yeah, I want to share that with you guys. Now, I should step away after win. Being hungry for another win is bad if it's not a dumb clear setup, right? So I should always step away after I feel good in the day. I should not like waste this good day on another forced setup. That's that basically. I think it makes completely sense. Now I can only use sequential SMT in the specified cycle. So what I mean with this is, let's say we have the New York session, which is comprised of 4 quarters, right? So let me just delete this or just duplicate it. Yeah. So these are the 4 quarters. And if we have sequential SMT here, so between quarters, so let's say this is the SMT. Right here, this is the SMT. Sequential SMT, because it's happening between the Q3 and Q4. Then this is only applicable inside of this high time frame quarter, right? So this is the New York session. So in the PM session, then I should not use this SMT anymore. Like it already did what it's supposed to do. It reversed price and took out buy side, right? That's what I mean with that. You can cancel these SMTs afterwards, because like too many things on your chart is not good, and this has not any relevance anymore after this cycle ends. Okay, so remember to let proper and obvious structure form. Should just keep reminding myself. A lot of these things are just thoughts and reminders and things I learned from my mentors, from Dave, just things I need to keep getting reminded of. Sorry. So Remember what has to happen first. Don't trade based off intuition. This is what I did one of the days where I expected the highs to get taken out, but I don't see any clear reason why it should do that. So I don't see an SMT. I don't see price retracing back to equilibrium, to a premium PDRA or discount pre-DRA. I don't see a displacement. If I don't see all of these things, my intuition is worth nothing, right? I need to see the market telling me exactly that it actually wants to do the thing that my intuition is telling me, right? If that makes sense. So take fucking profits if price is not efficient and hesitating to go towards a draw. Don't hope, understand what the charts are telling you. Every decision should correspond with how I view the markets. This is an interesting thing because I think maybe some of you guys can relate, is sometimes when you know based on how you view the markets that your take profit is not going to get hit and things are not looking good, you still hope for your take profit to get hit. And that makes no sense, right? In this week, sometimes I still let the trade run because I just wanted to make that money. But according to how I view the markets, there was like, for example, an SMT. And if I see an SMT, I should take profits. That's exactly in my plan, or I should at least take partials, right? And so I didn't do that. So it's not according to my plan because I just hope to make that money, right? So you should always take decisions based on your plan, right? You should always trade your model, your framework on how you view the markets. Every decision you make should be because that's in your plan, right? That's how you view the markets. If there's a bearish PDRA getting disrespected, we are closing very, very bearishly, and you're in the long, of course, based on how I trade, because I know that if bearish PDRA is getting respected, I should probably close the trade. Then I should close the trade, but I don't do that because I want price to hit my take profit. Sorry if I'm ranting, but this I just need to keep reminding myself. I should only trade and take decisions based off of how I interpret price action, if that makes sense. For me at least, I hope it makes sense to you guys. But then just find the draw. I just realized this week, you actually just need to find the draw. Once you have that, you just need an entry model, right? And how I find the draw is just by looking at quarterly theory, looking at raw price action, looking at order flow, looking at market maker models. And then I should have a draw, right? Once I have that, I just need an entry model. I just need an SMT inside of a kill zone, a displacement. I just need everything saying that, okay, this is going to be the manipulation and we're going to go towards that draw on liquidity, right? Now, then not last, we still have a long way to go. But this says here, I need to close out everything after the low resistance liquidity has been taken. And let's say price stepped below stacked through opens, right? So let's say we have low resistance liquidity right here. So low resistance liquidity, we took it out right here. We took the low resistance liquidity out here. We took the external low, the external sell side liquidity out. And this is also happening below a true session open. Let's say the true New York open. Also maybe below the true day open, right? Which is midnight, New York time. This tells me that, okay, sell side is taken out. We hesitate to go even lower. We are still below we just tapped below the true session and true day open, which means now I should be looking for longs, right? Should be looking for longs below the stacked true opens. We have two true opens here, which is more confluence that looking for longs here is really, really good. We sweep sell side, so what's going to be next if we hesitate to go lower here? Most probably buy side, right? So I should close out everything right here. I had my runners run on some trades here, but it didn't make sense, right? So I should close everything and I should only let runners go when the next draw is really clear. So basically when there is like a bigger time frame sell model again, then I can expect, okay, it is actually going to go lower much more. But we didn't have that, right? We were literally bullish on the week. So yeah, that's that. So I should recognize my entry model where I have the most confidence with. This is something I really like to trade. It's basically when I have a clear draw on liquidity and I see price respecting from a fair value gap in equilibrium of an internal model, right? So let's say we have a higher time frame sell model, right? We have the smart money reversal right here. Okay, I know the draw is going to be these lows because now this sell model is confirmed. What I like to look for is an internal model. So let's say here, this is the range that we're playing with inside of a session, inside of a kill zone. What do? Is we retrace back to OTE of this range. What do we do then? Let's say we have a fair value gap right here. We have an SMT stop rate. We disrespect this fair value gap. This is for me a really nice entry model. I should study this more. Just literally once we have the internal model. So you guys see that this is a model in itself, right? This is the higher time frame model. Yeah. Sell model. We know this is most likely going to be the next higher time frame draw on liquidity, right? The sell side liquidity. But we have another same model aligning with the high time frame model, right? We have this model. What the hell? Not this. We have this model, right? This internal model, which is also a sell model, but within this higher time frame model. Then we have manipulation at an area where we expect the manipulation, right? Instead of OTE. We disrespect this, let's say a 1 minute fair value gap, 5 minute. Then this is for me a really nice entry model, right? So whenever the draw is lower, we have price retracing back to equilibrium or OTE of the range. We have an SMT, so manipulation. We have price disrespecting fair value gap. I just market enter right there with my take profit at the external draw, or if this fair value gap is like a little bit here and I end up entering here, this is obviously my first low-hanging fruit target, right? If it's a good RR. This is not looking good, but this is just an example, right? So yeah, that's basically that. So I should recognize this entry model, right? I really like this. So basically, again, to summarize, I have a clear dull and I see price respecting from a value gap equilibrium of an internal model. And then as soon as it like sweeps or makes an AMD, SMT, whatever, just some kind of manipulation. And then we have a strong 1 minute candle close, which is disrespecting a fair value gap, right? The displacement down or up, if we're bullish or bearish. And then I market enter basically with stops at the internal model's manipulation, and I target the low-hanging fruit, but also I can target the external draw of the higher time frame model, right? This can also be a pyramiding method to basically scale into your winners, right? Now, I should keep remembering myself that I should trade what I see, not what I want to see. Again, this goes back to intuition. Again, I should never trade based off intuition. I should trade the market, not what you want the market to do, right? Then I should have playbooks if I don't have a mechanical strategy, right? I say this because I'm not a mechanical trader. I'm not like, oh, this happens, this happens, this happens. This is my checklist, I trade, right? Yes, I have a checklist, but I'm more of like a framework trader. I have a way of looking at the markets and I trade based off of that, which is what I think is the best. Of course, trade whatever you want, but this is just my personal opinion. I just have a framework and I trade based off of that. Of course, I have like some rules I need to follow. I need to see an SMT, blah, blah. But in general, if everything looks good, that's when I take a trade. And it should not like, oh, I missed this, so I'm not going to take a trade. But if I trade this kind of way, I should have playbooks, because not every setup is going to be the same. Because with a mechanical trader, most of the setups is going to be the same. They have exactly the same entry, stop loss, whatever. But with me, I don't have that. I trade based off of a framework, not really mechanical. So I should have frameworks in that example. In this case, I mean. And that's what I'm starting to do right now. I've made a sort kind of playbook where I trade based on a framework, but I have different kind of models, right? So let's say I just started right now. This is, for example, the 1030 reversal colliding SMT model. This is, for example, the 830 noose model, right? And whenever I have a trade based off of this model, I just add it and I see this over and over again, and I build conviction with it. I build confidence because I see this over and over again, and this is basically where I should strive to, right? I should have playbooks that I can constantly look at to build my conviction that this actually works, right? These are all good trades based off of my framework with a specific model. So yeah, that's really something nice I started to do this week, which I recommend because it really helps me with my trading. So then above the true opens, you're looking for possible sells. Below it, you're looking for possible buys, right? Just remember that. This is quarterly theory. Now, something I learned also is that a lower time frame market structure shift is less relevant than a higher time frame key level. So to give an example of this is, let's say this is an order block, right? Let's just make this a little bit more clear. This is an order block, and we have something like this. We have price making a bearish pattern, right? We sweep the high, we displace lower. A lot of the people, they will be looking at shorts here, right? But this is just the 5 minute, let's say. This is the 5 minute. But this is a daily order block, right? Which is a high probability order block because it's a thick one. We sweep liquidity, let's say, with this order block. And we have a fair value gap formed also right here. Right? So in this case, this stupid pattern is not relevant. This is just a stupid pattern. This is what every simple ICT SMC trader trades. So it's very important to look at the narrative and to understand that a lower time frame market structure shift is less relevant than a higher time frame key level. Okay, so that's just something I learned and I want to share with you guys. Just keep reminding myself of these things. It's a really nice lesson for me this week. Then, premium bullish market structure shifts are to be faded and discount bearish market structure shifts are to be faded. This means that, we are basically in discount, if you go back to this example, but we want to short. So that's not good, right? So let's say this was looking like this. Then yeah, I agree. Then this can be a nice trade right here, okay? But as long as we are in discount and we want to look for shorts, it's not good, right? The exact same for looking at longs, because we sweep the low, we displace back. If there is a bearish PDRA, you should keep note of that. It's more important than the stupid pattern. So we are still in premium, so I should at least wait for price to go back to OTE, and then maybe we can fade this order block if we have some nice structure forming on the lower time frame. But the general rule is always know that these are more relevant, right? The higher time frame PDRAs, higher time frame sell side, higher time frame fair value gap, higher time frame order block, higher time frame whatever. Okay, now where were we? I think right here. So again, I just repeated myself, but let's just make it clear. Stop to break even is only valid if it's a new invalidation, right? But I can disregard that we can have an internal sweep. If we got that internal sweep and I got stopped at a break even, then I can just re-enter, right? But I need to protect my risk. Then I can use sequential SMT when looking at ES and comparing it to the Dow. So what I mean with this is, whenever I'm looking at NQ, I should not only look at SMT there between ES and YM. I can only also look at YM and see the correlation between YM and ES and NQ, right? If that makes sense, because sometimes you don't see an SMT if you're looking at NQ and comparing them to ES and YM, but you can see it on YM if you're looking at YM and you compare it to ES and NQ, right? So you should always use these three pairs to look for some kind of SMT and manipulation, right? Then at least 2 of them need to be in sync for high probable conditions. This is something I learned from Day also. If, let's say, one pair is trading, let's say these are the 3 pairs, right? First one is NQ, then we have ES, this one is YM. The first pair NQ is trading above the 0.5. Now, this ES is trading below it and sweep this low. And then YM is not sweeping this low, but is in the other half of this range. So this is indicating that it's not high probable, right? You want to see at least something like this, right? Where NQ and ES is correlating really nicely, which they should do, but YM swept the low, right? This is what can give you nice probable setups, right? At least 2 of them should sync for high probable conditions. Something really nice, a really nice gem I learned, which makes sense actually, right? It all makes sense for me. So that's why I use it right now. Now, after price sweep sell side, always look for bullish setups. Remember why markets move, they move from liquidity to liquidity. So something I should keep reminding myself of. The more I fade market structure shift, the better I will become. I just really believe in this. I believe that, let's say you have an SMT, you don't really need a market structure shift. You can to have more conviction, but the less you fade it, I'm just going to say it again, the more and the profitable you will become, the better you will become. I strongly believe in this because if you have a really clean and precise view of how the markets move and when they move, then you don't need it. So that's why you see me often in my trades this week. You see me entering after just a small 1 minute is getting disrespected because everything else just aligns, right? Then yeah, something like that. Now, if price is on your side, I can neglect quarterly theory. What I mean with this is if everything price-wise, so everything based on candles, is looking really, really good, then it doesn't really matter if I don't look at the quarterly theory. Because, yeah, if that's a loss, it's a good loss because everything just looked good, right? Let's say we reprice back to equilibrium. We have an SMT. We have 1 minute fair value gap, a bearish fair value gap getting disrespected. We respect the bullish fair value gaps. We again have a market structure shift. Everything price-wise looks good. I should not look at quarterly theory then, right? Because quarterly theory is mainly used for extra confirmation and knowing when to trade. But if price is looking really, really clean, I should take a trade, right? So yeah, SMTs do not work if it's not aligning with the drawdown liquidity and if price is not ready, right? I talked about this in one of my trades. I should focus on small PD arrays, right? Remember the low on Wednesday inside of a fair value gap is literally like a super small BPR, and you should not, like, let's say we have like a really big range right here. I'm looking for longs. What PD arrays am I looking at? I'm looking at this big hourly fair value gap. Okay, this can work. But you'll see most of the times price ends up respecting of a really, really small PD array. And I love this way more than I love these big ass PD arrays. I don't like them. So I should focus on small PD arrays. Then setting alerts on all 3 pairs at the true session open is a good idea. Let's say this is a true session open, but on NQ we didn't go below it. We end up making the low right here. I should always check for ES or the Dow if it went below it, because that can indicate, okay, for NQ we actually don't need to go below it because the other pairs already did it, or one pair already did it, right? So if we end up forming a manipulation above it, then it's still valid, right? Normally I would only take trades if it's below the true open, if we tap below true open, but I can look at all these 3 pairs, all these correlated pairs, which is ES, YM, and Q, to look if that happened. Now, this is for the ones that stick here to the end. This is something I learned from Day. I respect the guy, but I'm just telling you everything I know. because this is what I learned. This is my reflection video. I'm not gonna gatekeep anything because I'm in a mentorship. I mean, I need to do this because this is actually my diary. This is not just for you to learn from me. Of course it is, but this is just literally my reflection. So I should talk about this, about everything I learned. So this is something really, really nice I learned. It's basically called precision swing points from Day. All credits to him. What it basically is whenever you have an SMT. So let's just take a look at the low of the week on NQ and compare it to ES. You can see that if you take a look at here, we don't really have SMT here between ES and NQ, but on the Dow, let's take a look. This was actually an SMT, right? This was the SMT with the Dow that end up being a sequential SMT between Wednesday and Thursday, right? So that can indicate the low of the week for Q4 to go higher. But what do you see here? You see here, this is the SMT, right? And look at this. Right after this SMT formed, this candle on Dow is down close, and this candle on NQ is up closed, right? So you need to be looking at the 1 hourly time frame because we're looking at the weekly cycle, right? We're looking at the week, and it's best to look at the 1 hour time frame. Is what Day states. And right after we have YM not taking out this low, but NQ did, we can look at this 1 hour candle and see, okay, this is a down close candle, this is an up close candle. So this is a sign that the market might reverse, right? And then we can use this candle as a gap, right? And you see what happens with news. Price exactly tapped the wick to the tick, and then we push price up. Again, this is just one example, but you'll see this so many times. For example, there was another example on GBP USD this week with comparing to Euro USD. This is so much sauce. I don't know if I'm supposed to tell you. I mean, I pay for this, but this is just insane shit. And I respect this Day guys so much because this is so much value, and this is literally how you read the markets. This was on Monday and Tuesday, right? Monday, Tuesday, GU, EU. What do you see? Sequential SMT, because this is the high of Monday, the high of Tuesday. On GU, we end up not taking the high of Monday. This candle that swept the high was a up close candle on EU, but on GU, it was a down close candle. So this is more confirmation that this sequential SMT can also work, and that this is going to be the high of this week, which end up happening, right? So then again, we can use this wick to take trades off, right? So yeah, if there was a fair value gap, of course, this was another entry. But if there's no fair value gap, then the wicks can be used as gaps, right? You see Michael and ICT, you see everyone saying wicks are also gaps. Yes, but when are they gaps? They are gaps when it makes sense, when there is sequential SMT, when there is a precision swing point, which is two correlated pairs that are basically doing the opposite thing, right? Up close candle, down close candle after the sequential SMT. Then this wick can be used to trade off of, because this should be the protected high, right? We shouldn't go above this high after the sequential SMT on the weekly cycle. So yeah, some really, really big sauce. This can be used on every cycle. But remember, if you're trading the weekly, you should reference the 1 hour. If you're trading the 90-minute cycles, the session, you should look at the 5-minute. If you're trading the micro cycles, you should use a 50-minute PDRA. You should use 1 minute entry and
and then SMT, just all of these things are also in my trading strategy video. But yeah, that's basically that. That's some sauce. Last thing I want to end with is looking for good setups every day, aligning with my plan, using strict risk management and trade management will get me to the next level. I should keep telling myself this. I know I'm on the right path, but just the only thing that's going to stop me is not managing risk. This was an amazing week. I still sometimes took some trades that are not really good, but I know that if I only focus on the good setups, I have good risk management, good trade management, right? I take off my trade when it's necessary, all that stuff. I protect my risk. I know it will get me to the next level, and I should focus on this. So that was my weekly reflection. I hope you got any value from this. And yeah, I hope you're also improving on your trading journey with me. Whatever you're trading, however you're trading, doesn't matter, as long as you are reflecting, whether you have a journal, whether you make videos. I hope you have an amazing rest of your day, and I'll see you guys next week. Peace out.